Hello everybody, kind of an in-between day with the holiday tomorrow. Hello Ash, how are you? Kevin, how's it going? Tone, Summit Sally, how are you? Ricky, Robert, Ron, Russell, Luca, how you doing? Eric, Ethan, Frederick Lindstrom, how's it going? Okay, I want to start off with Euro USD. Blake was putting out shorts up here on Friday, and I just want to show you a couple of things on the website. So here's a basic technical look. So we're right there. Looks like correction maybe back towards 112. Let's read what basic technical says. Reversing from area that was expected to, okay, 113 for support level. Nick would allow for maybe one more high. Nick's got a harmonic pattern up here. She talked about it late Friday. So it looks like it's a little bit over 1450. So we have an inside day just in case we get one more pop this week when people come back from holiday. And remember, we have a jobs report this Friday. So that's going to be a potential inflection point. So ForexAnalytix looking for Euro to be in a corrective mode, either from here or one more high. Give me a Y if you understand the analysis. And we're all on the same page. Okay. Okay, good. IBW, how are you, my trading warrior brother? Very good. Okay. So here's a couple of looks that I have. Besides the Euro, we have the stock index is up sharply this morning. We did get a 2-week reversal under 31 because we closed, I think we closed here. This week's 2-week reversal comes in at 35, 24.35, here it is. This candle right here, excuse me, 24.37. So it would be worth a shot up there on the off number. We'll see if they could generate one more high or fail from here. Under last week's low, there's trouble in the S&Ps. And I know Steve has some very bullish counts in Euro Yen, so maybe I'd avoid it, but I think that a few of these are ripe for a correction. This is a weekly. Maybe above 130. I'd like to see one more high in Euro Yen. Everyone see this high right here? It diverged a little bit, but I'd like to see a 29 print or better. I don't think it'll take out the 70 level. Guppy actually looks to be a little bit more ready because here's one. This was a new high that we diverged, and then this high that we had diverged. I don't know if they could squeak out one more high, but yen crosses look like they're due for corrections. Here's Aussie yen. Same type of picture. We're at new highs here, diverging. And let's look at Kiwi yen. Kiwi yen as well, weaker RSI reading. So I'd be looking for sometime this week some corrective action. How are you, Brooks? So some corrective action in some of the yen crosses. Be watching that 24.37 area off number for perhaps an entry in the S&Ps. If not today, maybe after the holiday. And keep in mind that we have the NFP later this week. Just a quick look at CAD. You know, it still looks pretty sick to me, but we did post a divergence here, really well overdue for some type of rally. And to me, any rallies back towards 131, 150 is a shorting opportunity. You might have some type of ABC setting up here. We have a higher low here. Kiwi already had a nice break. Aussie's a little stiffer. So those are my views coming into this week. Hello, Steve Volge. How are you today, my friend?
Hey, Dale.
So Blake suggested an abbreviated session. Maybe we go for, 45 minutes or so, no guests today, and kind of give our community some things to put on their radar screen if they don't act today. Maybe once after the holiday liquidity improves. I think it's pretty thin today, don't you?
Yes, for sure.
Okay.
For sure. Also, don't forget, this is the first day of the second semester of the year, end of the third
That's right.
quarter.
That's right. So I know you.
And tomorrow is the 4th of July, so you understand,
Yeah.
These couple of days can be a little bit tricky, more than a little bit tricky. I mean, we might see moves that are silly, or we might see moves that get completely retraced. Although, to be honest, some of the moves I see, if you remember, we had talked about it, I more or less expected. I mean, we expected, just to give randomly some examples, I expected the break, the move higher in the USD yen. I believed that Euro USD has a good chance of getting rejected from up there for at least, a pullback. Aussie Kiwi the same. We were also seeing a rejection from the previous highs in cable. All those were welcomed beginnings of perhaps a corrective move or something else we're going to soon find out. I think this is going to be an important week because also for seasonality reasons, as I mentioned, first day of the semester, first day of the quarter, but due to the holiday, I would say that we will have to leave the whole week to monitor the price action because, that might also give us some insight on how the shifting in positionings might take place. So, it's definitely an interesting week to watch and definitely a week to be nimble.
Yeah, and I'm not, I'm not real impressed with the 4-hour chart I'm showing on the Dixie right here. I mean, this RSI reading down here, Steve, was 15. So I know we've had a nice bounce, but I actually would like to see NIX harmonic pattern work in the euro where we get one more high in the euro for a short, and this implies another low coming in the Dixie. Are we going to go to 660 first? But
yeah, but don't take that as a granted. I mean, harmonic patterns as any other pattern are patterns that give you like the perfect, the ideal readings for a top
right.
or a, but we are still extremely close to that, right? Extremely close to that. I mean, just look at the length of that harmonic pattern.
It only would have extended maybe another 20 pips above the high that we posted on Friday.
Still, I mean, even if we reverse from here, the harmonic pattern will have been right. I mean, yes, right. Obviously, if every harmonic pattern predicted a top or a low with a plus or minus 5 pips range, then we would all be billionaires. You know what I mean?
Aren't you?
I mean, billionaire, no.
Millionaire?
No.
Thousandaire.
Yeah, above that, but
I know you're more than 100 there.
Yeah.
Anyway, hey, how are you, Glenn? Okay. All right. So you want to take the screen, my friend? Show us what you're thinking about here.
And actually, speaking of the DXY, I think we have interesting things to see today. Although, as I said before, just be a little bit careful. The day is obviously a little bit special, right?
Yeah.
Okay, so what do we see here in the DXY?
May try and fill a gap.
That's not the only thing. Is that for the time being, what we're seeing is a morning star formation. We're seeing a morning star formation here. Okay. I mean, those three candlesticks consist of a morning star formation and a quite strong one. So if the DXY actually closes roughly, let's say, above 95, 85, that pattern is going to be valid, and that's actually a reversal pattern. Of course, a single candlestick reversal pattern does not make a reversal, but it makes for a first signal about it. Resistance is currently obviously at 96.50, which is the general area here, 96.45, 96.40, 96.50 there. So it's important for us to at least break that area before even considering anything more. But we are seeing a reversal, and this reversal is also apparent in the Euro USD, which we had drawn that last week.
Yeah.
You know, two possibilities. One possibility of getting rejected from exactly there. We drew that on Friday and coming down. Or a second possibility, which I said in my opinion is a lower chance possibility, is to penetrate decisively above there and then at least come back and retest the broken area. As it seems for the time being, we're getting the first scenario, which was the most likely to me as well, because I believe that to be a fifth wave. So I think that we are more or less bound to test. First area of interest is 113 here. Second area of interest is here, 111.35, call it. So I think this is an expected correction.
Yeah.
Yeah, it is. And actually, you know, it was one of these cases that the trade is very clear, very clean, and with an amazing risk reward. Another one that we mentioned. Actually, I even had a conversation with Blake about it on I think it was on Friday night after the markets closed. You know, we were dividing the pairs we were going to do, and I told him, please, Blake, let me do Aussie and Kiwi because I have a very, very clear bias about them. I strongly believe that we're going to get rejected from here, regardless of, you know, if that's going to prove to be a corrective retracement or a reversal.
Yeah, maybe it catches up with gold. That's been, you know, and that's something else we talked about last week. My comment was how weak gold was in the face of a weak dollar. What would happen if the dollar caught a bid? So I have my answer today. Yeah,
and you see this is a big triangle here. This was also a five-wave move up. And the rejection came from the perfect point. I mean, we almost tested this descending trend line. We penetrated the 88.6, but we never closed above it. And we posted this, it's almost a gravestone doji actually. And now we're working on an evening star formation as well in this pair. As long as we close below 50% of the first candle, this one, then this is going to be an even star formation. So I wrote on the end of week analysis that the Aussie USD tested the 88.6 fib and the descending trend line resistance today before getting rejected lower. This leg higher is very mature and the risk reward is not in favor of being long but rather short up here against 77.50. That's exactly what I wrote in the analysis. The importance of the area of resistance we're currently testing is also more than apparent by a look on the weekly chart. Let's visit the weekly chart.
Hello, Diego. How are you? Hi, Harianto. How you doing, my Trading Warrior brothers?
No,
so isn't that interesting? You know, we were looking at, we saw like tons of wedges last week. Now we're seeing morning star formations and
evening star formations. Yeah, exactly.
Evening. Okay.
No, it depends on the pair. On, you know, if it's a USD, if the USD is the first or the second component. Yes. So, and on the other hand, about Kiwi, which we're going to visit now, which I'm also short since Friday, as I said. You remember that I had a very clear bias here. We had a triangle. That's why I took profits on that short. I said that we're working now on an ascending wedge, and this is exactly what we projected from here when we were here actually. What was it, Wednesday? I think it was Wednesday. I said, okay, another move higher, and then a break below. And today we're getting a very strong candle. What I wrote on Kiwi on the analysis on the weekend is that we realized that given the recent strength being bearish, the Kiwi is a weird thesis, but we believe that the Kiwi is currently at the last stages of an ascending wedge. If that proves to be the case, we expect a move lower, even if that proves to be corrective. Our first target is 0.7230. A daily close above 0.74 invalidates this view.
Or is that
So,
a pattern
as you
in
see,
play?
no, currently not a pattern in play because we don't have a break, but personally, you know, I jumped the gun and, you know, I'm short since Friday actually.
Okay, nice.
But it's soon going to be a pattern in play. You know, I'm waiting. If you look at the 4-hour chart, we're currently testing the wedge support. So we are very, very close to confirming a break below the wedge. It's not
Is
confirmed
that
yet.
also an ending diagonal?
Yes.
Okay.
Yes, and it's also a big triangle.
Okay. Nice trade, Steve.
Thank you. Also RSI divergence, if you see, etc., etc., etc.
Yeah.
And if you see at the weekly, chart, because it's important, you know, keeping an eye at the big picture always.
Yeah.
We also had this. You see, like this channel.
Yeah.
Yes. So, and this area, this very important area here. So I think that, keep in mind something else. Kiwi had posted 7 consecutive weeks higher in a row. I don't know how long back we have to go to find such an event. I think we have to go back here actually, which is 2009. So if I'm not mistaken, no, we had one here as well. So we have to go back to 2011, to 2012 to find 7 consecutive weeks higher. As you understand, I mean, 7 consecutive weeks higher is not something that's sustainable, at least not in the short term.
Another number of completion. 7 days in a week. 7, yeah. Interesting. Go ahead.
Okay, so I think you know, my thesis is very clear, and it was very clear to our subscribers as well during the weekend. I'm bearish both the pairs, and we take it from there. Now, having to do with CAD-yen, because you just had a discussion about that, a very rough estimation of CAD-yen for me, which of course, you know, projecting 3 moves ahead, like I'm trying to do here, is obviously a low probability game. But do you want to know what I see in CAD-yen? I see like a 1, 2, 1, 2, 3, 4, 5 to complete the third wave, 4, 5 to complete a move higher. So if you are asking if I would be short the CAD-yen, the answer is no way. Do I expect a pullback, a first pullback to come soon? Yes, I do. Would I be shorting that? No, I would not.
Similar situation to Euro-yen.
Yes.
Are there any yen crosses that you would play for correction? Maybe the Aussie yen and Kiwi yen, or you don't want to have anything to do?
No, I don't want to have anything with being long the yen, anything.
Okay.
I'm not saying that corrections won't come. They will definitely do, but I don't want to be on that side. I want to be on the opposite.
All right. So better off just shorting Aussie and Kiwi against the buck instead of the yen. Okay.
Now, if we see a big risk aversion coming in the market and we see some big moves, etc., I might reconsider. But asking me today, at the time of the webinar, the answer is definitely not.
Okay.
If something changes, we are here every day. I'm going to be the first one to tell you.
Maybe I will be.
So let's have a look what our friends want. They want to have a look at gold and silver. Okay, gold and silver. Don't tell me I didn't warn about it. This is silver, by the way.
Yeah.
I'm short. You remember what I had said that day?
Yeah. Yeah.
A break below 1650, I'm short, and I am short.
Target?
My target, my first target, my target is here actually, 1580. I mean my first target.
All right, so we're going to go back to the little mini flash crash when Blake was showing it. I said, I've seen times when things happen like this, they end up being an omen print.
Yes.
And eventually they go back and retest it.
Yes, and you're very right about that. But let me be clear here. Let's play a little bit with the chart. Okay. First of all, it's important to see what we're going to do when we retest 16,025, which was this low. I don't take into account so much this flash crash, as you called it. It's not exactly a flash crash because, you know, it's sustained itself a little bit longer than a flash crash, but anyhow, I consider this a silly move. So I'm not, technically speaking, I'm not taking it so much into account, and a proof to that is the fact that I consider this to be a bear flag. If I consider this real price action, this would not be a bear flag, okay? But I ignored it because I think I should have ignored it. So the first test is what happens at 16. Then it's this level, roughly, let's say 1580. But the bear flag projection brings us to a test of 1550. So for each of these levels, I'm going to be testing what the hell is happening. For the time being, my stop loss is above here. So my stop loss is above the high that we registered on Thursday. But if we test 16, I'm more than willing to move my stop loss lower, which is going to be above today's, this week's high. You know, I'm going to see how I'm going to handle it. But for the time being, I'm feeling very comfortable being short silver. And although our friend asked for gold, I'm going to show gold immediately.
Oh, breaking the blue line now.
Not only that, you remember I had said, and I even wrote to analysis, that this is a pennant. I'm bearish gold. The only reason I'm not short gold as well is because we had this confluence within $3. I even spoke about it on Friday. We had this ascending trend line, which kept alive the possibility of a flat top triangle. I didn't really believe that this is, you know, the main scenario, but you never know. We had the 200 DMA and we had the 78.6. All of those were gathered within $3.5 range, which is, you know, a very short range. So in essence, practically speaking, I consider that a confluence when, you know, when three important levels are so close to each other. But we've penetrated now this very comfortably. Of course, this is not the end of the day, but I'm going to tell you that if we close below this confluence, you know, things are getting very serious for gold, and very serious in a bad way.
It's basically $100, $120 formation. So I mean, if you want to be real bearish, it projects, you know, from the breakdown, $100, 1130.
Let me be clear. A minimum target for this, if you ask me, a minimum target for this, which we can calculate together, is this.
Okay. Okay.
Maybe, let's see, depends on how we consider this pennant, but okay, let's roughly, although it has two different interpretations where we can see it, but okay, yeah, a target is somewhere here, let's say, a first target.
Okay.
Okay, at 1,180, roughly.
Okay.
So, you know, if we close as we're closing today, you know, it's a very bearish development. And you remember we had warned plenty of times. Gold was showing weakness. Dollar was showing weakness, and gold and silver were finding it impossible to rally, right? That was a warning sign.
Yeah, that was a very good tell.
Yes. Yes, exactly. So being bullish currently, silver and gold, makes no sense. Honestly, makes no sense. I mean, what is exactly the pattern you would be looking at to be long? That's the first question. And the second question is, where would you place your stop loss? Anything can happen, but you know, I think that the chances of you getting unscathed by being long here is, the case is very weak.
Okay, you're getting a question on Euro NOK.
Steve, would you look at the bond? Yes, of course, I'm going to look at the bond. Euro NOK, please. Okay, let's take them in order. Euro NOK.
Nice
Okay.
three driver.
None of this.
I think someone tweeted that to me last week.
Yeah, none of this played out here.
Yeah.
Because the situation with Euro NOK actually is much simpler than that.
Yeah. Three driver. Well, a false breakout, everything.
It's a false breakout simply because probably, Dale, this is.
Yeah, everyone got long above the double top.
This is a wedge of some kind. You say an ascending wedge.
Yeah,
This is an ending.
Looks a lot
Yes.
like EuroCAD did before it broke down.
Exactly. That's exactly the case. So things are very simple here. Any move below here, you should probably expect this area to be tested, or at least, at the very least, this area to be tested, those two highs.
Yeah. Nice luck.
Okay. Yeah. So this is definitely in combination with the RSI. This is definitely a very bearish scenario playing out at the moment. It's not triggered yet, but honestly, I would not be long here. And even if we see another rebound, that might as well play out.
Scott, I don't think it is unusual. I've seen market examples where the market goes up and gold goes up. You could find lots of those examples. So why can't they both go down together? In fact, bonds started going down, equities started going down last week, and gold. So, you could have a whiff of deflation and everything could go down together. So I know that's the expected reaction.
Not exactly related to his question. Indirectly related to his question. We've recently seen a big confusion having to do with correlations in many instruments. We also had this conversation with Blake on Friday night after the markets closed. I think that something big is brewing in the market. The reason that correlations have started getting silly and some of them getting very confused, for me is another sign that something is brewing in the market. I don't know what something is going to be. Is it going to be a market crash?
What do you suspect? A couple of possible things that might be brewing.
Big volatility to be around the corner. Like big volatility increase to be around the corner. That's what I suspect, actually.
Okay.
What I'm saying is not a signal. That doesn't mean that you should expect it tomorrow or on Wednesday or on Thursday. You understand what I mean?
Yeah, within weeks.
Yeah, but I think that,
well, you'll know. I mean, the next time VIX gets through, looks like now it would break out. Doesn't even need 16. It would break out before that, but 16 is going to be a big number in VIX. And that's just stock market volatility. So you're talking about volatility in all
general,
it's going to pick
in
up.
all instruments, yes, in all instruments, including stocks, yes, correct.
Okay.
I think that we're getting very close to a very interesting period, definitely within this year, definitely within 2017. By the way, Dale, I remain short the EuroCAD. You can see that it seems to be playing out nicely.
Yeah, you were right. That candle was it.
Yep, that was it. I mean, that was an outside black candle. That's a very, very strong signal. Especially, I remember my words exactly that day was that getting an outside bearish candle after such a strong candle that we had the previous day,
Yeah.
so managing to get an outside candle on an already large candle is definitely a very strong signal.
Yes. 47.30, 52. Looks like it's going to 42. And remember, I've been talking about it filling the gap down there. So
It is
you
very
got a good
likely.
shot. Yeah,
It
got a
is
good shot.
it is a very, very, very likely scenario now. And I also remain long EuroCAD and sorry, Euro-Aussie, because this is a likely scenario that I see here, at least another thrust higher. In essence, as you understand, that makes me, as long as I keep those two positions, that makes me synthetically, I'm short the Aussie and long the CAD. So in essence, synthetically, I'm long CAD Aussie or short Aussie CAD. Look at it as you like. As long as I keep those positions, both positions. Sometimes I'm also viewing my positions, you know, under that scope. I mean, a combination of positions often leads to a synthetic position. So I always want to know what's happening there as well. And if the question is what's happening with AussieCAD, this is what's happening with AussieCAD. Doesn't look very healthy to me because it's now penetrating this bottom.
Okay. Someone's asking about Aussie Kiwi because Blake was very bullish. We had that. I'm not sure if it was a false breakdown, if you think the lows are in, or we're just bouncing from oversold levels. I don't know.
We discussed this on Friday, and besides mentioning once again my frustration for having to look at this pair, which seems very boring to me, what I told you is that why shouldn't this be just an irregular correction, an A, B, C, and we drew this thing exactly as you saw.
Yeah.
So would I be bullish the AussieCAD at the moment?
There you go, Michael.
Perhaps in the very short term, yes. But I wouldn't want to be involved at all. And second of all, I see yet no technical reason for me to want to be long in the medium term. Okay. So probably if I was forced to do something with it, I would probably short the next strength towards 1063. So if I was forced to trade it, probably that's exactly what I would do. Although I'm not trading it, and I don't really intend to do so. Aussie yen, Kiwi yen, they remain strong for the time being. Definitely, we're going to see some kind of a pullback coming soon. But for example, now
at least the commodity currencies aren't making new highs like the Euro yen and the Guppy.
Yes, so you're right. You're right, which is another thing that testifies to the thesis of wanting to be long the euro against the commodity currencies. This divergence that you just mentioned.
We're getting a request from Catherine to look at the bond.
Yes, definitely. The situation with bonds is quite clear at the moment. I'm going to see both the treasuries and the bond. First of all, this was a very, very, very bearish. This is the 10-year treasury, okay? This was a very bearish outcome. We more or less expected it. Gregor had warned about it, might have been even a couple of months ago, if I remember right. If not a couple of months,
he looks at this as being a big four, this whole rally, correct? Yes. Which implies new lows for a 5 and then a rally.
Yes.
And exactly. He thought that was going to be the catalyst for a weaker euro.
Exactly. And currently, we're testing a very important zone. A break below it definitely then gives even more credibility to this scenario, because then, you know, there is more or less thin air to move lower. So treasuries are like, you know, making a last stand here, but most probably they look bearish at the moment.
Okay, Rob Hansen is saying if risk ever comes off, Aussie Kiwi should accelerate to the upside.
Sure, fine, comma, let's say I'm with you, comma, but very important question. If risk comes off, you think that my first choice of trading instrument will be Aussie Kiwi?
No.
You know, it's a rhetorical question. I mean, do you think that the most affected pair will be Aussie Kiwi with risk off? No. So if we actually...
Yen crosses.
Exactly. So if we actually want to find proxies for a risk-off move in the FX universe, the last thing I would have thought of would be Aussie Kiwi. You're right in what you're saying. Usually that's exactly how it works. But I mean, I'm repeating once again. For me, in comparison to other pairs, it's like watching paint dry. Why should I do that? If you can successfully trade it, I mean, I'm not, you know, I'm not making an argument against doing or not doing it, because my first argument in trading is do whatever works for you and keep doing that, and make rules for the type of trading that works for you, and that's how you will end up consistently making a living out of trading. But for me, you know, it's not something I would trade. It's not. I've traded very few times when I saw some very clean technical setups. And, you know, it's because you're investing capital in a position that might take a long time to prove you right or wrong.
Yeah.
That's the reason why I would choose anything else.
You know, now, I get this question a lot, Steve. Someone will ask me, Dale, can I trade for a living with 10K? My answer is yes.
Most probably not.
Yes, if you want to live beneath an underpass.
Yes, more or less. The only case that the answer for that would be a yes is that if you are a scalper, I mean, the only possibility for that to be the case is for you to be a scalper. So still it would be extremely hard. But for example, if the question is, sorry, I like to take like medium-term positions in the market. Could I trade with a 10K account? My answer would be absolutely no. Now, on the other hand, if you
can live with your parents, you can live with your parents in the basement, Dave is saying.
On the other hand, if the question is, if you are one of those scalpers, which I really admire, that I mean, because it's a hard work, let's be honest, that you can go in the market and scalp 5 pips here, 5 pips there, 10 pips here, 10 pips there, then yes, perhaps 10K for you is enough, because you know, you're using high leverage, you're looking for, you know, very short moves in the market. Your stop losses are extremely tight always, and your risk very well defined, and you know if you're right or wrong very soon. So perhaps yes, but that's the only scenario that it's plausible. So having to do with boons, I think there is no question that this rejection from this trend line, we actually had a false break above it. We had confluence of resistances here. Actually, Nick got really unlucky with this because Nick established a short pattern in play when we were here, and this little move higher hit the invalidation level, and then you see what happened. So actually, she was very right on her thesis. The stop loss just proved to be just a little bit more tight than it should have been. But her thesis was absolutely right. This move lower is very emphatic. Today we're getting some kind of a bullish reversal, but to be honest, this move looks you know, to be almost impulsive. So I would say that even a rejection from here, I would be viewing it as a shorting opportunity either from this zone 162.70 or this zone, 163.90, let's call it. So if you're asking me if I would be short or long, I would probably be short at any bounce for a move down back to that area. Let me mark it somewhere here.
Stand deep, I would say your first sign of risk off coming would be taking out last week's lows in the indexes. That's kind of a line in the sand. You agree with that, Steve?
Yes.
Okay.
Yes, but we will still, if you remember, we had a conversation with on Friday, and there I actually described that for a bearish climate to be established in the market, we will still have to go through first the stubborn bids that are residing almost everywhere in the market. So for example, for us to become bearish, we first need to persuade the people that are still bullish, which are a lot of them, and the funds and everybody else, that the support levels is going to start getting taken out one by one. And for the time being, we have actually failed to do so. Because, for example, let's say that you want to have a barometer for risk, because it's a broader index that includes, more companies. This is considered the barometer. So let's have a look at it.
Boy, it's the NASDAQ dogging it today too, isn't it?
Yes. So
it's really your weak sister's the NASDAQ.
Yes,
correct. I heard someone say, who's a pretty good analyst, that we could have a 10% correction in like the S&P by September, but that it could be as much as 30 in the NASDAQ.
Let's see, because for the time being, I can tell you one thing. The first area of support in the SPX was 2,400. Okay, we tested that area intraday on Thursday, and we got immediately rejected. So, for example, if you are an investor and you're looking at this chart, if you zoom out, why would you be short at the moment? I mean, what is exactly the technical damage that have happened? I'm the one that have drawn here this ascending wedge. So breaking below the ascending wedge, I can tell you, is a first step. There's no question about it. I wouldn't be long. I wasn't long. I was actually short NASDAQ, and very happy to do so. I mean, I took some very nice profits there. The question is, on the other hand, if you're a longer-term investor, until proven otherwise, why would you currently be short? I mean, why would you currently quit your long thesis? We haven't even managed to penetrate a single serious support zone. I'm not talking about support zones that you can find if you go to a 1 hour or a 4 hour time frame. I'm talking about support zones that you can actually find if you go to the daily chart or to the weekly chart. So where are they? Where are they? When did we break them? We didn't. Only in NASDAQ we can start seeing some technical damage being done with a break below this ascending channel, right? But even this, somebody can claim now and tell you that, okay, this is an A, B, C, okay, goodbye, let's go higher. That's not my thesis at the moment. I mean, I wouldn't be long until proven otherwise yet, because this might actually be a 1, 2, 3, whatever. But for the time being, this remains to be the case. I mean, NASDAQ is weaker, and it seems to be presenting some kind of a short-term technical damage, but everything else is doing fine. Dow Jones, look at Dow Jones. I mean, look at how close we're currently at the highs. I mean, we're currently trading in 21,480, and the high was like 70 points higher. 70 points in 22,000 is nothing, is zero. I mean, look at this. So where's the technical damage? There's none done yet. So yes, taking out previous week's lows is going to be important, because in this case, for the SPX, that will mean finally breaking below the first series support zone, So that's what's needed to accelerate the downside, to actually start persuading people that are long that, okay, perhaps, my buying zones that kept working over and over and over again for years are starting to fail. And that's when you actually get acceleration to the downside. We're not there yet.
Great review, Steve. Maybe Stelios has some macro things to talk about if he's recovered from his weekend.
Hello, I'm here.
How are you, my friend?
Yes, but the question is, have you recovered from your weekend?
I'm trying. It was a weekend without kids, first time in years. So yeah, it was good.
I saw that
so
picture.
actually-
I saw that
so
picture
actually,
dancing at 3:30 in the morning. Stel?
Yeah, you got to do that
So
every now and then.
actually, Dale, you understand that we're asking him the wrong question, because the question is if he has recovered from the fact that he had to come back from the weekend.
Yeah.
Hey, I love being back. That's what I keep telling myself.
So
No,
what's on your macro radar, Stel? Anything really that, the next week or so that we should be paying attention to that you're seeing?
Well, really, I mean, I've been looking at things, and nothing major has happened in the last couple of weeks. So nothing's going to change my mind about something. If you remember, the main thing I was looking at was the dollar in the DXY chart. Remember when we had those 5 monthly touches on that descending trend line, which if eventually turned out to be a false breakout, and DXY broke below. That's still the most important chart in my opinion.
Okay.
But that now is just trading in the middle of between this trend line and between the support zone, which is in around 92.5. So really, the most important chart for me is the dollar, and it's doing nothing at the moment. I am very frustrated about silver, like you guys talked about, because I am long, and this is the 4th long I've done in the last couple of years, and the first 3 have done very well. This one is not doing that well, so I'm looking at it, and I'm actually getting close to my stop, which is in the high 15s. So 1565, I think, is going to be my stop. That's what I'm looking at right now. But one thing to remember about today's move is that, like you guys said, this is a very low volatility day, and low volume, day. So remember the last 100 low volume days. What have precious metals done? I think 99 of them have gone down. They're trying to take the advantage and push them lower. I'm looking at that. I'm still looking at that. I don't like it, but I am not yet at my stop. So I am not happy with this one, but I'm still looking at it.
Okay, I know that you were also you were paying close attention to the crude oil. It's your contention that we're getting, we had that bounce last week. Do you think that could have been a major low, or do you think we could retest those things?
Yeah, anything can happen, but
yeah,
I am, for the medium term, I think any such collapses, let's say, like when it goes from $53 to 42, moves like that, I think should be bought. I think we saw that from last year's when the OPEC countries all agreed. Obviously, they're not keeping to the agreement. It looks like they're increasing production, but still, when the time comes, they are going to do what it takes, because these old producing countries, this is what they have. It's their main export, so they have to do something to protect it. So I think I was talking about this on our chat, I think a few days ago, that I think oil has formed a low. I think it will keep bouncing probably towards $50, some of that, then another correction. But I think medium term, I stand by my call that we're going to see $60 before the end of the year. That's what I think is going to happen. So I personally actually went long oil. Actually, I didn't go long oil. I went long. I bought some BP stocks. This was late last week, but anyway, that's another story. I
also like energy in general, Stelio.
You like? Sorry, I didn't hear.
Energy.
Energy, yeah.
Yeah, and that 50 number comes off Nick Nick showed that crew chart being a 3 driver and 50 target was off her harmonic.
Yes, that was a very nice chart, actually.
Yeah.
Yeah. So, I mean, I don't know. It's, you know, you get people from both sides, you know, people who are very bearish oil, and they tell you, you know, volume, production volume is going up. Shale just keeps pumping and pumping. Yes, but at some point, they have the limits as well. And we saw that. We saw that when oil went to the 30s, it was a straight bounce back after that. You know, it stayed in the 30s for a very short time. Rig counts went down fast. And you know how these things are. They're not, when rigs go down, it takes a long time for them to be operational again. It's not, I shut them down today, I open them, you know, I'll start them tomorrow. So we have to look at the whole dynamics of it. And yes, there are arguments for lower oil prices, but I think that there's a lot of potential events, binary events that could push it higher, you know, and I mean, I don't know what the catalyst is, but I like buying dips in oil. That's what I like to do. So, but other than that, you know, there's not much that has changed in the last couple of weeks, you know, in the euro, in sterling, in the dollar. Okay, we've got some moves, but nothing fundamental has changed yet. So
Okay.
I'm still monitoring. Yeah, I know my youngest daughter is calling. She's probably hungry. She's always hungry.
She's saying, Daddy, why did you buy silver for me?
Yeah.
No. She would never say that. She's saying,
Okay.
Daddy, why didn't you listen to your partner Stelios telling you not to buy?
Yeah. I know. Otherwise, not much else on my radar, I'm afraid. It's most of the charts I'm looking at are on the middle, because, you know, I look at long-term charts. My charts are mostly monthly and weekly, and there's nothing that's really attractive. I still look at Norway. You know me, I like Norway. I like selling rallies. I've done that a few times successfully. The last one I got stopped out, which was a few days ago, but that's another one I like. Yeah.
Since you mentioned it, Stelios, Dale, yeah. I'm obviously still short USD NOK, and as you see, we got actually a penetration through here, and we had already drawn what's coming next if that happens, and it is exactly this.
Yeah, you were there. Yeah, you were there from the high.
Yeah, I mean, almost at the. I almost top ticked it. Almost. I mean, like just a few pips below the high of the tweezer top here, because, you know, we tested the same area twice at 856 and change, and you know, that was a great rejection. The channel, this channel that they had helped actually time it, and the fact that this was also the 61.8, that's what's great with confluences. So you know, I'm even more confident now in this. And anyhow, I'm comfortably in the money now, so, you know, no matter what happens from here, you know, I'm going to take some profits now. If it's going to be more with a move down here or less, if we actually move higher and show some strength, it's a different story. But I'm still a strong believer of the move lower. And if you see in general USD RAB, which is also the ruble, which is also, all of those are also correlated. Just the USD is, you know, on the different side here. We seem to be creating some kind of a flag, triangle, or whatever. So,
sorry. No,
yeah.
Nothing. Sorry.
Okay. So I'm actually expecting probably continuation here as well. We had shown this chart a long time ago to people. That was a great buying opportunity. So this is what I expect with USD ruble. As long as we're holding this area, I expect that the next break is going to be higher again, which also points to my thesis. You remember that we warned about the very low here, people, and you remember that the last thing I said last week was, do not try to sell into the first bout of weakness you're going to see in oil.
Yeah.
And this remains to be the case. So what I would like to do here is to see what's going to happen, you know, at least when we test this, we have some kind of a confluence here. So for example, let's say, now we can delete this because we projected that from when we were lower, but you might see something like this. Okay, this would be a nice confluence to test here, the 61.8, the descending channel line. So weakness to 45, I would be a buyer. I'm not going to be a buyer because I'm already involved with pairs that are correlated. So in essence, indirectly, I'm long oil since the lows, but not by owning crude. So any weakness would not worry me. I would expect some bid to reappear between, let's call it 44 and change to 45 for at least one more wave higher. So that's the situation. And a friend is actually asking about copper as well. We haven't had a look at copper in some time because actually the situation with copper is quite clear that it's unclear. In what sense? I had said back then that this move here is extremely choppy, and whenever you see overlapping moves like these ones, this is obviously some kind of long-term consolidation. This is an important area. As a first touch, we seem to be getting rejected.
Yeah. Maybe a right shoulder.
We
turn out to be, huh?
It could, but for sure, to answer the question, what do I see in oil? I see that I shouldn't be involved with it yet. That's the only thing I see with oil. With copper. This was an ascending wedge. That would have been a nice short if you took it here at the break below. So it would have yielded some profit. But since then, it has become extremely choppy, and as you see, this is, you can't find impulsive moves in here. So, I can just tell you that you can be short or long the extremes until it proves that something else is finally happening here. Until then, I'm paying attention to it like I'm having a look at it like every 3-4 days, to see if there is any surprise happening or whatever. And other than that, I'm not really pressing it.
Okay, well, Steve and Stel and Face, this is going to be an abbreviated session. That's okay with you guys?
Yes, of course. And tomorrow we have no webinar.
Right. And
Wednesday, July. Yeah.
Yeah, Wednesday we have a nice guest, Jason Sen, very well known Twitter handle at Day Trade Signals, provides a lot of trading ideas to institutional clients. So I've talked to Jason before. That should be a great interview on Wednesday. I want to wish everyone in America a happy 4th of July.
Happy 4th of July indeed. Enjoy.
Yeah, and, don't blow off any fingers with fireworks, and enjoy the day, and be grateful that when you look around the world that we live in peace, and hopefully that continues, and enjoy your family. And I always recommend that people aren't mind readers. Tell the people that you care about, verbalize it, let them know life is fragile, and have a great holiday. Everyone else around the world, take advantage of the U.S. being slow, and today would be a great day to subscribe to ForexAnalytix, so you have all day tomorrow going over all the research, because you want to have a great July. It's a new quarter. I don't think it's going to be a quiet summer. I think there's going to be great opportunities this summer. It's going to be an unusual summer from some of the things that I see. And want to thank everyone for hanging out with us today. And thank you, Steve, for a great rundown on everything. And look forward to having Blake back with us Wednesday. And we have some great guests, and we have an exciting NFP day on Friday. So make the most out of downtimes to smell the roses. You're very welcome, Catherine, and see everyone on Wednesday. See you on Wednesday, Steve. See you on Wednesday, Stel. And enjoy the rest of your day. Go smell the roses. And above all, don't just count your pips, count your blessings. So this is your host. Could I bring you a cup of coffee, cream or no cream, or you drink your martinis dry or on the rocks, let me know because I'm the host, and I'll bring it to you gladly. And have a great, have a great holiday. I'll see you, my partners at FA. Take it easy, everyone.
You too, man.
All right, adios.